Hello, welcome back to Business Consulting. Today we have brought you another financial model. This one is about the nightclub business. This includes up to 5 years or 60 months assumptions forecasting on the basis of its revenues, um, its costs, and other relevant information. As you can see, the how to use this tells you about the peach cell are the input cells, whereas the gray cells are the formulas results, and the light gray forms are the helping cells. Then comes coming towards the input sheet. As you can see over here, the input sheet includes all the assumptions that are relevant to the business, such as funding assumptions, revenue and cost assumptions, customer and marketing budget assumptions, capex and opex assumptions, as well as the working capital assumptions. Then comes the revenue analysis. The revenue analysis includes the total calculation of customers um, and the revenue that is being earned from them and the cost that will be incurred. Then comes the marketing budget. This tells you about this sheet specifically tells you about um, the digital marketing cost that would be incurring uh, in the next 60 months uh, on the basis of on monthly basis. Then comes the startup summary. The startup summary, as you can see over here, tells you about first years, gives you the summary of first year of the business functioning. It includes the total funding, total expenses, total assets, liabilities, and capital of the business. It also helps in calculating the total additional funding that will be required by the business. Then comes the financial statements. This includes the income statement, which gives you the net income of the business, as you can see over here, on yearly basis and monthly basis, going up to 5 years or 60 months, as you can see over here. Then comes the cash flow statement. The cash flow statement gives you the cash inflows and outflows of the business through its operations, operating activities, um, investing activities, and financing activities, as you can see over here. Then comes the balance sheet. The balance sheet gives you the total assets of the business and the total liabilities and equity of the business and compares them both uh, with the total assets. Coming towards the financial analysis sheet, this gives you the break-even analysis, which tells you about the break-even sales of the business, company's valuation, which gives you the WACC of the business, as well as the expected equity percentage that could be offered to the investors. It also tells you about the company's NPV and IRR. Then comes the sensitivity analysis. The sensitivity analysis basically is based on three different scenarios that are actual, optimistic, and pessimistic, as you can see over here. These shows the payback period of the business in these three different scenarios. Then comes the KPIs and ratios. The KPIs and ratios includes all the relevant financial ratios, which helps in making financial decisions. Then coming towards the CAC-CLV analysis, this sheet basically tells you about customer acquisition cost in each year. It also gives you the customer lifetime value in each year and compares them both in form of ratio. Then comes the working sheet. Basically, this sheet includes all the relevant information, all the relevant calculations that are being used in the financial statements. These include employee payroll, operating expenses, lease or depreciation schedule, loan schedule, and working capital. These are in calculations are in detail in this working sheet. Then comes the dashboard. This is the basically sheet which gives you all the information in graphical context. It also includes the main KPIs of the business, which will help in making the key decisions of the business as swiftly as possible and as accurately as possible. That's it. This is the end of the video. Thank you for watching. Do like and subscribe.